Good day, all. Ira Epstein with your financial market wrap-up, and here we are on Tuesday, the 1st of October, 2019, and we're approaching 5:10 p.m., which means, and I'm getting confused with this, we're already looking at trade behind me, because we're after 5 o'clock, for Wednesday, October 2nd. Got it? Today was a day full of data and confusing markets. Why? Well, what we saw today was construction spending and manufacturing numbers that were not good. In fact, these numbers, one of them was as bad as it was in 2009. So the question for traders is, finally, has the U.S. been now markedly coming at this Chinese-U.S. trade deal where we're slowing down quickly and a lot? If so, we're going to get an idea on this coming Friday when we see our jobs numbers. You've got to be careful. If those numbers come in bad, anything under 130,000, even those that are hawkish on the Fed might turn around and say to themselves, you know something, it's caught up. We're now getting to that point where we need that protection. Get strong number out of that, it might still keep them at bay, and they'll say, well, we're slowing down, but it's nothing yet material. That's what you're dealing with. In Japan, we're looking at a marketplace where the government, actually the Bank of Japan, is considering buying foreign debt now in place or in lieu of some of the debt they buy monthly to support their own markets. They've been keeping interest rates down because they're the buyer, and they can just whatever they want, whatever number they're throwing there. Well, now if they start buying U.S. debt, it gives a bid to our bonds and notes. And today that was the big surprise. This market, once that announcement came out, which was after I did my morning subscriber video, surprised me. The reward of the day was where you failed in the bonds, not in the bonds, but actually the stock indices during the day, and where traction was felt in the metal markets. But let's go to the stock indices. What you've done is you have now returned to the 18-week moving average of closes. For the week, we're still trading under it. So the bias, while I had an upthrust, I'll leave that word there because you haven't taken out a previous low. We went up and you're correcting down. I'm still going to leave that word, but the bias is shifting to the downside as long as you're under 29.50. You're only 10 points under it, and that goes like that in that market. Now, what did happen in the market is super interesting because we had a distribution pattern up here, and we had talked about that and how this market kept getting up on a closing basis near that high point and just couldn't punch through. Now what we have is a market that's got a pattern of lower highs and lower lows. Today's key was not to take out the high back here and that day was 29.95, which was last Thursday's high. Today's high turned out to be, as you're going to see, 29.94.5, and from there, the market let go. Where do you think the resistance came in today? Because my subscribers saw this. I recorded at 6 a.m., so they saw it pretty soon, right at the 18-day average of closes. So the risk in this market when you were up there was not to get over 29.95. Then if the market decided to fall, one of the support zones could be the 100-day average in green of 29.60, let's call it, or the Bollinger Band. You went to the Bollinger Band. Remember, let's get rid of today, which is now for Wednesday. This is how Tuesday's action looked. And you know what I'm going to say. The first time you challenge a Bollinger Band, I often look for the pros to take some of their position off. So I think the pros were short, and I think they're covering some of that position. They didn't do it then, they're doing it now, and I still look for good support between the lower Bollinger Band of, let's call that 29.42.50 and the 29.29.60 zone, the 100-day average of closes. Momentum, you're oversold. So we have a downtrend. Downside bias is in place, momentum is down but oversold, and you've hit a target zone, and you might extend a little further, but you're in a support area right through there. In the NASDAQ, the same thing happened. The market, the key was not to get over last Wednesday's high. It did not. You've got the pattern of lower highs. You went right to that 18-day average down. And today you went to the lower Bollinger Band, and I'll show that to you right here. And that's where this market found its support. Again, I think the pros took some money off the table there, as it's the combination of the 100-day average and the lower Bollinger Band number. They could be looking for more, but trying to play for that is the hardest thing. Do you take off all your position? Well, I'll let you manage your own money. I teach it in my charting course. In the Dow, the key was not to get back through last Thursday's high. That was it, 27,042. This was Friday's action. This was yesterday. Today's high, 27,040. Did not take out that high, came down right to the Bollinger Band, and that's where I think the pros took some money off the table. And in the Russell, I don't know that anyone's really playing this one. It's hard to trade into the 100-day and the 200-day, and this market did, as you can see, on Monday, this is where you closed, you rallied back up today, did not hit that key average, but you went down and you found your traction at the lower Bollinger Band. This is the weakest of the indices. You can see how this market's down. It's back under the 200-day moving average of closes as well. Now, we'll see if the pros went short today and if they're going to try to cover. I think that the first time you hit a Bollinger Band top, the pros write calls. Now, the call is a lot more riskier, depending on where you're at in the level, than writing a put, in my opinion at least, at say 10, 11, 12. Because you can run here to 30, 40, but it's very hard to get down to an 8 or 9 number when you're in the VIX at those areas. Can it happen? Certainly it can happen. But I think that they did it, and we'll see if they're going to stay with that position or not. In the T-bonds, what the market did is it looked bearish to me this morning. You had lower highs, lower lows. I really think the pros were selling the market at 161.9, and as soon as this market cleared yesterday's high, which was right here, that number is 162.18, I think they skedaddled. You have an outside day up, as you can see. The market is out of a trend. It's just now back and forth against this 18-day average. It's overbought. The bias is up, but it's trendless. Then you get to the 10-year note, and it's pretty much the same thing. I would have thought they were coming into the market, and they wouldn't want to see prices over the highs of, that would have been Friday, and that would have been right here at 130.13. Market pulls back, and you have this big outside day down. This happened later in the morning when Japan made that announcement that they're going to be buying some foreign debt, looking to change the policy that they've been buying debt with and impacting their own economy. Maybe they're throwing in the towel, saying what they've been doing all these years, and it's many, just isn't working for them, and they're going to try something else. When you get to TLT, little different story. This market had the benefit of opening after that Japanese news was out, so while it fell back, it gathered support at the 18-day average, and now you could argue, I could move this line now back here and say you've got higher highs, higher lows. The opening of the time there was the key. In the dollar index, we had 4 days in a row over the upper Bollinger Band. One of the things that I teach is that consecutive days over or under a Bollinger Band matter. The theory of the algorithm, that's these black dashed lines, is the market will trade within it 95% of the time. Now, you know as well as I do, eventually you're going to break out of that sideways action and trend one way or the other. But the key is, how many days in a row can you stay over it? My rule of thumb is that I count each consecutive day, and the word is consecutive over it, is subtracting one of those 5 percentage points. So I gave the market last night a 1% chance, look at the video, of being over that number. It doesn't mean the market's bearish. That's not what I'm saying. I'm thinking that those that want to buy will have a better opportunity. This is how you looked coming in, and this is what you did. You can see big reversal back under that band. Now the momentum could be turning. Support back at the 18-day average resistance, the Bollinger Band top. Eurocurrency. It wasn't quite the same flip, but the idea is there, as you can see. The reason it's not the same is this day you had a close over the Bollinger Band. Then you came back under it, and now you're getting a little spin from that. Don't know what that means other than you're still bearish. oversold, have hit some downside targets. I'm looking for resistance on rallies. In the British pound, maybe Boris Johnson's getting something done. I'm reading, that doesn't mean it's going to happen, that be it in France, Germany, there's talk amongst the government leaders that make up the European Union that maybe this idea of that backstop in Ireland could have a time limit to it. That would be something that the Parliament might accept. I don't know if they will or won't, but maybe the British Parliament would accept that. That would be a win for Mr. Johnson. He's talked about that. In any case, you hit today your lower Bollinger Band, and you know what I'm going to tell you? I'm a broken record on it. Hit the upper band or the lower band. I often think that's exactly where the pros take some money off the table. Now, you're oversold. You've hit downside targets. You've come down pretty sharply here. Maybe this is where the market's saying, okay, for a moment. In the Japanese yen, you can see the news today. Market gets down. It missed hitting the lower Bollinger Band by 2 ticks. Got back up. And tonight it should be fighting at that 18-day average is what I'd expect. You're not in a trend. You have a lower low, higher high. And I think the world wants to digest what the Bank of Japan is trying to accomplish. In Bitcoin, you've got a market that finally had a big reversal yesterday, followed through today, pulling back a little tonight. Now, will it embed is going to be the question. The numbers are not under 20, so you're just oversold. And I think this market might be trying to say maybe the 7,500 level is a low enough area of value for the moment. In Brent versus WTI crude, you're still keeping the bid into the Brent over the WTI, even though all of them are in downtrends. You can see how you're in a downtrend here. You're oversold. I don't know if you have the strength here to get down to that lower Bollinger Band. Ecuador today announced that they are pulling out of OPEC at the first of the year. So you've lost Indonesia, Qatar, you're losing this. I mean, that's just recently that's happening. I looked at the API numbers tonight, and they were friendly. Yet, friendly numbers only worth a 40-point rally after a $10 break has me concerned as to what this market's looking at. I see resistance back up here at the 18 and the 100-day average, and I see an oversold market. In WTI crude, again, will you be able to get down here? As I said, the API number showed a net draw of about 5.5 million barrels. The market was looking for flat, and you're only getting a 30-point rally. That's concerning. Maybe the market is just saying, with all this bad economic data coming out, where's the demand going to come from? In the gasoline, you're still in a downtrend, fighting now at the 100. That's the green line, the 100-day average of closes. Resistance between that and the 18-day average. Trend down, but oversold market. And in nat gas, even this warm weather that they had in New York and so on, it's going to be there again tomorrow. But then it gradually starts shifting on Thursday and getting into more seasonable weather. You can see how this market just saying, nah, folks, too much build, too much supply still on the market, and not that real cold weather setting in just yet. As I said, I start you off in the morning with a video that you're not going to see on the internet. You can see it if you get into my website and you have a user ID and password, or you have our applications that allow you to see it in there, but you have to be a subscriber. And what it is I wake up at about 4:30, 4:45 every morning. I'm watching already financial TV. Before I roll out of bed, I have a pretty good idea as to what's going on, and I'm reading. So I'm reading all the main news services. I'm trying to figure out what's going on from Asia to Europe, and then, of course, reminding myself, what are the morning reports, and could they be important one way or the other? Then I start off talking to you. I go and I start a video. I'm not in that video, thank God, at that hour, right? But I'm going to review 45 charts typically. We're going to talk fundamentals for a bit on each one. Not every chart, not every time, but we'll do some fundamentals. But it's really about technical analysis. And it's about taking what we do here and putting it into hyperdrive in these markets. So you're going to get points of entry, very specific. Exit. Profit objectives, and of course where I'm wrong the markets. You're always got to think where you're wrong. You won't survive if you don't think that way in the futures markets. The leverage can be painful. And then I cover all these sectors. Now, you don't have to look at them all. There's if you will, a bar on the bottom. you've used them all if you've watched videos. And as you pull, they'll light up and say stock indices, currencies, whatever market. If that's too difficult, on the side, it's going to list these, and just click it. It'll take you right to the beginning of that section. So the idea here is confidence, ideas. It's like you sitting next to me. We're going to be wrong. We're going to be right together, okay? I mean, that's just how the world is. Nobody walks on water. But when you look at it, if I can throw an idea your way, every 30 days the first 30 days is $7.95. After that, if you decide you want to stay, the next 30 is $15, or you can go to a 1-year subscription. And yes, you need not go to the 1 year. There's no contract. You decide. If you go to the 1 year, we give a break of $13 per 30 days, but you got to pay it all up front. So that's your decision to do. If you'd like to learn more, simply go to our website under the word research. You're going to then go to the morning subscriber video, pull it down. It'll tell you all about it. Click up here and it'll take you there too. I'm Ira Epstein. I'm hoping tomorrow's as good as this morning was, and I'll talk to you in the morning. Take care.